We have several economic classes of people in the United States, from the poor to the ultra-rich, and the left claims that the rich aren't paying their fair share in taxes. The right claims that higher taxes will negatively impact the economy. This video will explain the fallacy of class warfare, show who is paying what, and explain how debts and deficits affect each income class's lifestyle. I'm Jeff Schuster, and you're watching Reengineering Politics, which provides objective information on political matters so that you can make informed decisions for a better America. I have created a simple financial model using data from the 2022 U.S. Census. The U.S. Census in 2022 breaks down financial classes into quintiles. Now, a quintile is 1/5 of the population. The census also breaks out the top 5% and the bottom 5% of income earners. To make this clear, these populations are households, not individuals. For the rest of this video, I have simplified the data from the U.S. Census Bureau. The indigent are the bottom 5% earning no income. The poor are just above the indigent, earning an average of $20,000 per year. Low-income households are next and earn an average of $45,000 per year. Middle-class households are the middle 40% to 60% and earn an average of $75,000 per year. Upper middle-class households earn $120,000 per year on average. The upper class is the top 80 to 95 percentile, and they earn an average of $200,000 per year. The wealthy are considered the top 5% who earn $500,000 annually. Democrats claim that the rich are not paying their fair share of income taxes. So let's see who's paying what. Two types of taxes are levied on income: income taxes and payroll taxes. Added payroll taxes include withholding for Social Security and Medicare. You can see this in the table that the income tax rate rises as people earn greater amounts of income. This column shows that payroll taxes as a percent of income decline for higher income earners. This is because Social Security and Medicare taxes are only charged up to a certain cap. This cap continues to increase with inflation. In this column, you may notice that higher income earners get greater tax deductions. Some call these loopholes in the tax code. Ironically, the same people who call them loopholes are the ones who created these deductions in the first place. These tax breaks are often given by Congress to favor certain kinds of spending. Most wealthy individuals earn passive income through real estate and stock equities. With the current progressive tax code combined with the nature of payroll taxes, people in the middle and upper classes pay the highest tax rates of all income earners. Income taxes are not all taxes. Two added revenue sources for the government include property tax and government fees. A government cost that reduces individual taxes is a tax credit. Property taxes are a price paid each year based on your property value. Even the indigent and poor pay property taxes in the form of rent payments to their landlords. Property taxes increase as the value of owned property appreciates. Wealthier people pay more in property taxes because they own more valuable property. Government fees are charged for a variety of activities. The government can charge a park pass fee, vehicle registrations, toll roads, parking permits, construction permits, professional licenses, and many other activities. Wealthier individuals pay more in this category because they use more fee-based government services than those with less income. Tax credits are money the government gives to balance income inequality. This could be an earned income credit, housing assistance, utility payment assistance, healthcare coverage through Medicaid, child care tax credits, food stamps, or other government assistance based on income level. Indigent people are paid disability income, Social Security, and unemployment to survive when they can't work. Each economic class spends its money in different ways. If the excess lifestyle is 0%, this economic class is spending exactly what it receives in income. Poor people don't qualify for credit, so they must match their living costs to their income. The upper middle class has no excess because they live within their means. Once given credit, the poor, low income, and middle class will spend more money than they earn. This excess spending turns into debt. If the excess value exceeds 0%, then this economic class is spending less than it earns. Both the upper class and the wealthy are net savers. High-income earners avoid debt and invest excess earnings in stocks, bonds, or other ventures to earn additional income. This investment money flow is critical in growing a capitalistic economy. As each style is lived out, each person pays sales tax for whatever they spend. This interest column shows that the rich will get richer and the lower and middle income classes will get poorer. This downward wealth movement by lower income classes results from living above their means. Political conversations tend to devolve into bickering between the left and the right about who pays for government. The left complains that the large corporations are making record profits and paying little in taxes. The right argues that the wealthy pay all of the taxes while the poor game the system for handouts. So let's see who's paying the most for the cost of the United States government. So it must be noted that my categories are not equal percentages of households. The indigent and wealthy are the top and bottom 5%. The poor and upper class categories are 15% of households. The upper middle, and lower income groups are 20% of the U.S. household population in 2022. To look at the contribution to the government based on equal quintiles, we can combine the two extreme categories into one. This means that the indigent and poor categories will receive 2.4% from the government, while the upper class and wealthy will pay 50.8% of the cost of government. So in truth, the rich are paying much more than their fair share. Also true, while the poor are costing the government money, they're not costing that much. Contrary to popular opinion, the government doesn't just take our money and give us nothing in return. Our government does provide beneficial services. So if we divide the total tax revenue to the government by the total household population, we get $41,229 in government services per household per year. These services are public roads, a national defense, a police force, firefighters, Forest Service, criminal justice, public schools, airports, seaports, border security, and many other services. Some citizens use these services more than others. For example, lower income and middle class citizens are more likely to send their children to public schools and use public transportation, while wealthier individuals will opt to pay for private schools and purchase their own means of transportation. Public services will be more valuable to the poor and indigent, while wealthier households will opt to use their income to pay for private services. Income classes that can afford to save money will gain added interest or appreciation in investments. Income classes amassing debt will lose money to interest costs. When we add the public benefit and interest costs or income to each economic class, each household's income is rebalanced. The wealthy are left with 55% of their initial gross income, and at 102% of their original income, the middle class almost breaks even. The poor gain much more in public services and benefits beyond their earned income. So if the government spends money inefficiently or unnecessarily, all income classes don't gain the financial benefit that I just showed you. My financial model assumes that the government spends the same amount as its income and tax revenues. This is not how our government operates. The total amount of government revenue in 2022 was $4.9 trillion. The actual spending by the U.S. government in 2022 was $6.3 trillion. In 2022, the United States government spent $1.4 trillion more than it earned in tax revenue. The total debt of the United States government at the end of 2022 was $33.1 trillion. So whenever the government spends more than it taxes, we call this a deficit. Deficit spending will increase the government benefit per household while limiting the cost paid for these benefits. Instead of $41,229 per household, this benefit will be greater when the government spends in excess. Unfortunately, this excess is offset by the debt service required to pay for the trillions of dollars in debt. The interest cost on the U.S. government debt is expected to be close to $1 trillion in 2024. This interest cost will reduce the benefit of government services, and it turns out that the added government services from deficit spending almost exactly offsets the reduced government services due to high interest payments. The adjusted income redistribution table looks something like this. So you can see that each income class experiences a modest benefit from debt and deficit spending in 2022. However, when you do the same for 2024's debt and deficit numbers, each income class's adjusted income will be lower. This will continue to be the case as our debt increases, especially with interest rates where they are today. So if the U.S. government decides to reduce its debt, citizens will experience lower government services during this payback period. However, future generations will benefit from reduced debt and reduced interest costs. Given that people seem to be gaining a net benefit from excess government spending, discussing the downside of excessive government spending may be necessary. So when the government spends money it has not received from taxpayers, it increases the money supply. And when this increase in money supply is not balanced by an increase in beneficial services from the private or public sectors, prices of existing goods and services rise. This is called inflation. The first effect of inflation is an increase in prices. Increasing prices increases business profits. These profits benefit corporate shareholders, which disproportionately benefit the upper and wealthy economic classes. Higher prices have the opposite effect on the poor, low income, and middle classes. These groups are price sensitive and wage sensitive. If income doesn't increase with the rise in prices, lower and middle income economic classes will have to cut back on their lifestyles to pay for necessities like groceries, rent, and transportation. These factors benefit the wealthy and harm the middle and lower income classes. After prices increase to the point that people can no longer afford to pay them, business revenues drop. Businesses are then forced to lay off their employees or close their doors. This is why recessions often follow inflationary periods. And if you want to learn more about how inflation decimates the middle class, please watch my video entitled, "Why the Economy Feels So Bad." So what if we tax the rich instead of going further into debt? If we increase the tax rate from 35% to 55% for the wealthy and 30% to 50% for the upper class, we can raise an additional $1.4 trillion in annual tax revenue. Instead of further going into debt, the rich can pay for the added government services. Something interesting happens, though, to our economic model when we tax the rich. So if the affected income classes want to maintain their current lifestyle, they will stop saving. The savings of the upper and wealthy classes of people are what drives the private sector market. Without added investment, the private sector market will stagnate and eventually decline. The United States has a combination of socialistic and capitalistic economies. The government services and welfare associated with our economy are the socialistic portions of the U.S. economy. The capitalistic portion of the U.S. economy is the savings and investments made by the wealthy and upper income class earners. These income classes earn additional wealth through the profitability of their investments. At the same time, wealthy individuals risk losing their wealth in these investments, and only the wealthy can make such a gamble. In a capitalistic economy, investments are used to grow the private sector businesses. These companies provide jobs for many people in the United States and other countries' economies. The hope of winning with profitable investments ensures that investors will continue to invest in U.S. companies. At this point, you may be thoroughly confused. If we spend more than we tax, we will go further into debt, and interest costs on that debt will reduce government services. Inflation is a risk, the rich get richer, and the middle class and poor feel the pain. But if we tax the rich, our private sector economy will experience decline and stagnation, primarily affecting the working class. So it would appear that there are no good economic decisions that will help the middle class. There have been a few ideas floated by different groups. Conservatives want to cut spending and possibly enact a balanced budget amendment to the United States Constitution to force the government to control its spending. For a balanced budget to work, the United States government must revise mandatory versus discretionary spending requirements. Currently, Congress can decide on approximately 20% of the federal budget. This is called discretionary spending. The remaining 80% is mandatory spending and debt service payments. The large elephant in the room that politicians won't discuss is Medicare and Social Security. These two funds will swamp the federal budget in future years if hard decisions are not made soon on how to better manage these programs. Younger generations believe socialism is an answer to their struggle to climb the same economic ladder as older generations. They struggle to find jobs even after they get a college degree. So if socialism replaces capitalism completely, they could feel financially secure. For a purely socialistic economy to work better than capitalism, the government must be smarter than consumers to decide which investments are best. And thus far, such intelligence has never existed in any government in the history of mankind. There is a middle ground that seems to elude our politicians. So if the government grows too large without spending limits, it will waste money and provide services that few people need. Our mission must be to define the specific roles for our government, set a fixed budget for those roles, and then fund those roles with necessary taxes and avoid excessive debt. There can never be a political promise without a price tag shared equally by all. If this price tag is known, voters can decide whether to pay more in taxes to fund such a promise. Today, politicians bloviate about how they will do this or that and never mention the price tag. The overall tax burden is currently 40% of the gross income of all economic classes. This percentage is higher in high-tax states like California and New York. This means the U.S. operates as if 40% of its economy is socialistic and 60% is capitalistic. With this tax burden, the United States must decide how to fund its current operations within this limit. Whether the United States raises taxes to eliminate deficit spending or decreases spending to adapt to the current tax rates is up to our political leaders. But continuing to increase spending and reducing taxes is only making life worse for those who can least afford it, and it's certainly harming our grandchildren and great-grandchildren. The truth is that few people are in any one economic class their entire life. So instead of being jealous of those who are better off than you, it may help you to know how to use the free market to your advantage and join them. The true measure of a great economy is not economic quality or inequality. The true measure of a great economy is the ability to attain whatever level of wealth one desires. So I plan to publish a video next week on climbing the economic ladder. In this video, I will share how you can grow your wealth in a free market. So thank you for visiting Reengineering Politics. Please stay tuned for my Climbing the Economic Ladder video that I plan to publish next week. If you prefer not to wait for my videos, read my book, Engineering Unity, A Path to Resolving Political Polarization in the United States. I've left a link to the Amazon listing in the description below. I have also left a link to my blog post on this same topic entitled, Who is Winning the Class War? I'd love it if you like this video and subscribe to the Reengineering Politics YouTube channel. Thanks for watching, and I hope you return for more political insight that is neither left nor right.